All right, we're live on Facebook. Everybody, welcome to the Blake's Business Minute morning show. I'm going to do this every morning. It's going to be something new. We're going to start off really small, short, and maybe expand a little bit. We're just going to see what people like. But this is basically going to be an extension of Blake's Business Minute, coming to you in the morning, giving you the 3 to 5 minutes of things you need to know, as you drink your morning cup of coffee. So, obviously, we have to start out with the markets. Markets are down this morning. Ukraine, Russia, popping off. Everyone knows that Putin's a problem for the markets, and he continues to be a problem as he's accusing Ukraine of military crimes. That sent the markets into somewhat of a sell-off. Dow Jones down 500 points at one point. That's 1.3%. S&P 500 down another 1.3%. And the NASDAQ down 1.6%. The Russell 2000 down about 2%, which makes sense. Small cap stocks will definitely take a bigger hit today if this volatility continues. As far as kind of sectors, they're all down. I mean, really the worst are materials, industrials, healthcare and technology, financials, energy, real estate, utilities, and consumer staples have all staved off the worst of the losses. As far as a equity factor range, I mean, growth is selling off a little bit heavier than value, and that's not by much. It's just a small amount. So let's dive into kind of some of the biggest movers in today's market, starting out with the NASDAQ. On the positive side, we have Cisco Systems up 3.5%. Pinduoduo, that's a company I'm not super familiar with. They're up 3%. And Lucid Group. Kraft Heinz also up over 1%. On the losing side, the biggest loser is NVIDIA Corporation. They're down almost 7.5% in early morning trading. So that's kind of the quick market update. Expect another kind of volatile session, I would believe. Another big news, yesterday had some pretty major sell-offs in some kind of significant names. One being Roblox. This is a company that does video games mainly for younger consumers, where you can build your own video games within the game. They missed. They had better free cash flow, but they missed on engagement numbers and had a little bit of a deceleration, which is going to be a problem for them. They're a growth stock. They've been flying high, very volatile, but down 26.5%. Yesterday, they bounced back a little bit with a 2% gain this morning, but overall down pretty big for Roblox. Another big name on the losers market from yesterday is Viacom, Paramount Group. Some of your favorite TV shows, Yellowstone, not able to save them as their kind of streaming sub-guidance is not going to reach 100 million by 2024. They boosted their streaming guidance from 65 million to about 100 million by 2024. But expect EBITDA and free cash flow to decline in their guidance, which that was a problem market didn't like. They're down 17.8%. Another one, which was kind of surprising because they've been on a pretty good tear for the last few years, is Shopify. As Q4 earnings per share beat, but operating income missed. So, and the subscription segment missed, which is likely one of the biggest parts of them declining so much. So they're down 16% yesterday. Let's check in and see if they've had a little bit of bounce this morning. I am not sure that they will, considering that, simmering Ukraine tensions continue to pop up. Nope, they're down another 6.5%. So not good for Shopify. Maybe good for if you're a long-term believer that they can pick it back up. The technology, I think, is phenomenal. It really does change the game for small business owners to be able to operate e-commerce websites on a much larger scale than you could before. So we'll see what happens there. Next up, we're going to dive into kind of the top headlines on the Wall Street Journal. For any of you who have followed me, most of my news comes from the Wall Street Journal. I love reading the Wall Street Journal every morning. That's my best source of business news. And so the top story is a pretty good one. Let me get a little sip of coffee, get more energized. Got the French press going today. I'll mix it up between iced coffee and French press. In the corner, I'm going to have a different cup of coffee every day on the screen. So, that's just something fun we'll play around with on the Blake's Business Morning Show. In the new studio, as we're taking our coffee break, the Blake's Business Minute sign is pretty sick. Thanks, Jamie, for letting me get that. Huge shout out to the wife for letting me get that. That's all I'll say. Very kind. All right, first story. Obviously, Elon Musk has had a lot of battles with the SEC and federal regulators in his time, but this one might take it to the next level as Tesla, the headline is Tesla tells a federal judge that the SEC is harassing Elon Musk and Tesla. And so this goes back to the 2018 regulatory settlement about the tweets. Everyone remembers the tweet. We're going to sell it at $400 whatever dollars, secured financing. I can't remember the exact wording, but it's something along those lines. They had a settlement, and basically he's accusing them of unfounded investigations and harassment from the SEC. And I mean, they're probably not wrong. The SEC definitely has a vendetta against Tesla, Musk. They don't like how he operates. They don't like how he does business. They just don't like him, and that's obvious to anyone who's been paying attention ever. But yeah, it's just a funny statement to hear someone who's a multi-billionaire 10 times over in one of the fastest growing car companies in the world to just accuse the SEC of harassing them. Yeah, it's just a very interesting continuation of this continued story of Elon Musk versus the U.S. government. So, not sure how it'll pan out, but this is an interesting development, and I think him sending that to a federal judge could be quite entertaining for all of us in the future. All right, next up. Not a lot of big news, no M&A news on the front cover. Pretty basic. I mean, work from home coffee sales through the roof. Nestle had a big boost in their earnings report due to their coffee business. So no surprise that people are drinking more coffee at home through the pandemic as people work from home more continued. That's just coffee. People love coffee. I love coffee. I made my coffee at the home today. I do go back into the office quite often, though. Most days I'm back into the office, so it goes back and forth whether I will drink coffee at home or not. I don't drink Nestle products, though, so that's not my forte. I'm not the one helping these sales boost, but that's important. So good for Nestle, good for coffee drinkers, people just enjoying a nice morning cup of coffee, and now you can enjoy it with Blake's Business Morning Show. All right, next up, LVMH, other brands raise prices, betting wealthy customers don't mind. Yeah, this is like the no-brainer. This is the classic, like, people will always pay for luxury argument, and it's probably true. So Louis Vuitton's brand came in on average 6 or 7% higher. Some other popular handbags. Yeah, I mean, rich people going to buy rich things, status symbols. I think this is fairly obvious that this is, at least somewhat a good move. I mean, if leather prices are going up, supply chain prices are going up, if you want to pass that on to the consumer, I think that if you're LVMH with their slew of products, you're the one that can absolutely do it. People are always going to pay for brand recognition. All right, that's all the big stories that popped out on the Wall Street Journal. So we'll dive into kind of our, more fun section. And with that, we are going to change up the angles. So, new angle. We got 3 cameras. We're going to view all of them today. And so this is a short report. So for any of you who followed Blake's Business Minute for a while or talked to me, I'm an avid consumer of short reports. I think that shorts do a very valuable job in the market system of pointing out when there are potential flaws and potential fraud in companies. And Spruce Point Capital has been one of my favorite. They have some very interesting ideas they've thrown out there. They released another report yesterday. So C3.ai, not a company I'm super familiar with the .ai. You can safely assume that they're in artificial intelligence. So I'm just going to read the executive report real quick, maybe give some commentary. We'll see. But then I'll send everyone the link or tell you where the link is so you can go read the full report yourself if you're interested. So C3.ai Inc., after conducting a forensic financial and accounting review, Spruce Point believes C3.ai trades as AI on the New York Stock Exchange, has a pattern of exaggerated business claims, and is using multiple strategic partnerships with well-known companies such as Baker Hughes, Hewlett-Packard Enterprises, Microsoft, Google, and Intel to project an aura as a successful enterprise artificial intelligence platform with limitless growth. So that's a pretty heavy statement. They're basically saying that they're using their partnerships to project to the street that they're a valuable company, even though those partnerships don't mean much in their opinion. So here we're getting to the argument. In reality, we believe C3 has failed to gain broad market acceptance on its third rebrand, and its revenues are being propped up by an aggressively managed and struggling strategic partnership with Baker Hughes amounting to 30% of sales. While C3 boasts a star-studded roster of investors, directors such as Thomas Siebel, I don't know, not familiar with him. Condoleezza Rice, I am familiar with her. Their track records are not entirely without blemish or without potential conflict. Mr. Siebel's prior company, Siebel System, was charged by the SEC for Reg FD violations, while Mr. Rice obscures from her biography her role at Kier, company charged by the SEC with fraud. Okay, well those are pretty big accusations. C3 on its third CFO since filing its IPO in September 2020. That is a large red flag, major red flag. And based upon our review, we find numerous instances of aggressive accounting and problematic financial reporting. C3's current CFO was the previously CAO and CFO of Telenav, which blindsided investors with a revenue restatement material weakness opinion. Even more worrisome, he has an arrest record for violence against his wife and allegedly making a death threat. Now that investors are more focused on fundamentals of technological growth stocks, we expect investors to pay closer attention to C3's revenue, net income, and dilution prospects. Based on our research, we expect C3's revenues tied to Baker Hughes partnership to fall short, while losses could exceed over $100 million per year. And they see 40 to 50% downside risk. So that's a lot to swallow in one executive summary paragraph, not even executive summary, just the quick summary before you download the report. A lot of stuff. I mean, the CFO stuff is very problematic. Like, you never want to see three C-suite turnover since an IPO so recently too, in September 2020. That's three CFOs in less than 2 years. The last CFO, if that's true, or current CFO, doesn't sound too great. So this is an interesting short report. I mean, I think in the technology growth sector, there's a lot of potential companies that have just tried to catch the wave, and they may not be all they're cracked up to be. So C3.ai, stock's trading around $24 at $23.56 right now. Down 7% in the last week. So they're down. That's not a huge drop. And so if they see 50% from where they've been, that's pretty significant downside still on the table. This report was released on the 16th yesterday. So interesting stuff. I have not read the full report. As a disclaimer, I will be reading it. I'll probably do some more content on it on Blake's Business Minute channel. So that's interesting. Yeah, but go see for yourself if you're interested in short reports. I am. I'm just interested to read them, whether you believe them or not, whether you think that they're playing the market game for their own benefit. Obviously, they're playing it for their own benefit, but whether you think that they're, actual malice in the actions, that's up for you to decide, but I always find it interesting. So we're going to go to our last view of the day. One more sip of coffee. Oh, are we going to get a special guest? Nope. Tilly, the stock picking pup, everyone's favorite stock picking pup, has not decided to join the program. And that's okay. But we're going to go to last section of the day. This is a fun section. Keep it light. Carl Icahn had a new HBO documentary come out. I think it was Tuesday night. Yeah, Tuesday night seems right. But But it was awesome. I absolutely loved it. It was a perfect blend of his like personal life, his history, with like kind of his business, not just acumen, but his business stories, the people he's taken on. For those of you who don't know who Carl Icahn is, he is a corporate raider or activist investor, which they go into a lot about the difference, and like it really is in the eye of the beholder what you see him as, whether you see him as a force of good or a force of destruction in the markets. But I thought it was a really good documentary. It was very well done. It had a lot of like entertaining tidbits, some great callback videos of him taking companies on. I mean, it goes through Tappan, his first activist investment when he switched over from activist investing in mutual funds before it was activist investing to actual kind of takeovers. So Tappan, TWA, the airline strike where the unions just come into his door and he's out there talking to them, to Apple, to Netflix, to his huge battle with Bill Ackman on CNBC. Great book about that, When the Wolves Bite, by Scott Wapner. I'm a huge Bill Ackman fan, so, I was a little, miffed with Icahn. I was on the Ackman side of Herbalife. But yeah, just interesting. I mean, they do a really good job with this documentary. Some of my favorite parts, you get more insight. I mean, he has the Napoleon Battle of Friedland painting in his office to remind him that, you could be the biggest genius, you could be the smartest person, but arrogance can take it all away. And I thought that was fascinating. Huge war buff. The little part about him and his son battling and trying to be more successful than each other, and having a year-long negotiation on whether his son will come and take over the company again. Some more of my favorite parts. The Gordon Gekko speech, you knew that Oliver Stone did it kind of a little bit off of Carl Icahn, but it shows back to back. It's like literally the same quotes almost of Carl Icahn taking on TWA versus Gordon Gekko taking on whatever, I think it was Western, I don't know what airline, I can't remember off the top of my head. It goes into the Pennzoil, Getty, Texaco War, talking about Joe Jamel in Texas. Just so many stuff that I didn't know about and want to read more about and learn more about, because I think it's a fascinating era, the 1980s in finance. And let me see, I have one more note. He talks about how gambling in the market, it's so competitive that he was a gambler and then got wiped out, essentially because he was playing the market like he used to play poker. I thought that was a fascinating tidbit. And his just thesis on it, the Icahn, no-brainer, very little risk with very large potential rewards. After a while, that becomes somewhat instinctive. And so that's he's literally saying zig when everyone else is zags. So I thought that was super interesting. I really enjoyed the program, and I thought it was really good. So we're going to end it with that. This is the first Blake's Business Morning Show. Leave a comment, leave a review, tell me what you want to talk about. I'm going to try to do this every morning from now on, probably a little earlier. We'll figure it out. So it's a evolving show, evolving podcast. We can do whatever. This is our show. If you want more information on something, let me know. If you want me to cover different things, let me know. So that's it. I got to mention, we have our clothing sponsor, sweatshirts, Marinas and Martinis. This is my clothing brand, my side hustle. If you've been following me, you've probably seen a little bit of it. You're going to see a lot more of it. But you can get these at www.marinasandmartinis.com. And you can use a promo code. You can get 20% off. First 20, capital FIRST 20. And that's it. So that's our clothing sponsor, myself, my clothing brand, Marinas and Martinis. So go check it out. Going to be doing a lot of behind-the-scenes content for that, kind of building a side hustle. How do you do it with your 9-to-5 job? Everything like that. So that's a Blake's Business Morning Show. Thank you for anyone who tuned in. It's been a lot of fun. We're going to do this a lot more often. All right, and now I just got to figure out how to turn off live.